investor doing things on your own? How about someone working with a firm that isn't so responsive or in sync with your investment philosophy? My podcast talks you through all things financial. Look, there's stuff you don't deal with very often, but investments, insurance, and retirement is something we plan for each and every day. This is the Pennywise Financial Podcast, and welcome to the show. All right. Welcome to the Pennywise Financial Podcast episode. It is the early April episode. Despite all the chaos and turmoil right now in the markets, how's everybody feeling? Right now, we've got the S&P teetering 10% loss year to date, just a few months in. This after a new regime, a new president in power. And that's really the focus right now. So we're looking at things like tariffs, the way this current administration is processing all the data and making changes at a pretty rapid pace, right? They're not waiting for anybody's input or insight. I mean, it was gangbusters, all hands on deck since day one. The market doesn't love that. Does not like radical change in such a short period of time, right? It doesn't allow people to adjust and modify and understand and maybe digest some of the things that are happening, right? You talk tariffs and you think, wow, what's going to happen to the price of goods and products that we're importing, right? Are we going to be able to afford things that are made here in the U.S.? Well, I think those are some of the things that are on the hearts and minds of just about every investor right now. So let's take a look at the bigger picture in the market, right? So we talked about the S&P 500. Just today alone, it's down almost 5%. A 5% loss on the S&P 500. I'm sure every article you're going to see online, every headline you're going to see on the news is going to be focused on that. Terror in power, the sky is falling. What are you doing with your investments? It's fear. Get out and keep your money safe. Well, that's not really the whole story, right? We all know that. It's in the moment. It's pretty hard to rationalize with that. It's hard to be comfortable with it. It's hard to accept it, right? But I had a meeting earlier, and I was talking to a client, a long-term client, and we talked about the market downturn. He says, is there anything I should be doing right now? Well, if there was anything you should be doing, we'd already would have taken action on it, right? We are a comprehensive firm, just like all the others with holistic planning, blah, blah, blah. But the fact of the matter is, we're paid based on assets that we manage. As your accounts lose money, we lose money too. So we want to be cognizant of that. We don't want to be turn a blind eye to the market, to the economy, to the current administration and what may or may not happen to our investments. But we also have to be patient and understand that the market does have cycles. The market does have peaks and valleys and troughs, and sometimes they feel a little longer than they should, right? But if you are a client that is invested, you have accepted risk and understanding that you're not always going to make 5, 6, 8, 10% each year. Despite the long-term gains in your average, maybe 7, 8, 9, 10+%, that may be very true. But, each year, your actual experience will be quite different. And we're at one of those inflection points right now where people are starting to second guess their investments. Am I in the right place? Makes you question, geez, I said I'm comfortable making 20, 30%, and that's my target, and that's my goal. What if you lose the same? Is that still appropriate for you? So that's the S&P. If we go back and we take a look at the NASDAQ, so we think of the tech-related stocks that have a pretty high multiple. They are not cheap by any means. They have not been. Down almost 14 and change for the year, just 3 months in. Q1 is over. We've seen almost a 15% decline in those type of stocks. Now, they had pretty high multiples, and yes, people have made tons of money on those stocks in the last 5, 10 years. That is very true. But it's begging the question, should I still have money allocated there? How much? How much am I comfortable with? And then maybe more importantly, the stock selection. It's not just the sector and saying, yeah, okay, I own them all, but which ones do you own? Are they still worth owning? So that's the NASDAQ. If we go to the Dow Jones, we think of the more industrial type stocks, although that's not the only type of stocks that is going to be found in this index. The Dow Jones is down 4.6% year to date. And if we look at today's downturn, most of that came from today, almost 4%. Let's look at the other aspects of what may or may not be worthwhile. You think of some safe havens, like where should I have my money? What can do well in a market like this? Well, let's think about that for a minute. We know that gold has been kind of a safe haven, if you will, an insurance policy for times like this. Do you always want to own gold? Well, probably not. But let's take a look at gold shares. We look at the gold index. We're looking at GLD year to date up 18%, up 18% year to date. That's the GLD. Today it's actually down a little bit, 0.75%. But year to date, 18 and change. That's a pretty nice return. A couple other things we want to take a look at. The XLE, how about energy? You might think energy would be a good place to be. Well, it's up just shy of 2% this year. So it is up despite the stock market being down as a whole when we think of S&P 500. But today, that energy fund, that ETF, is down 7 and change. So worse than the overall market itself. So that's the XLE. If we take a look at some of the other aspects of the market, how about the financial sector? Well, that sector is down almost 5% today. And year to date, it's down just about 1. Just about 1. We've got the real estate sector, right? Think of real estate maybe being a safe haven, kind of non-correlated to the stock market, right? Or the bond market. Well, perhaps. Year to date, it's up just about 0.5%. Today is down 2.8%. So maybe you think real estate's a place where you can find some stability. Think of a place where you can collect some income. It's also a place where a lot of wealth was created. Maybe not on the stock exchange, but owning real estate outright. It's getting harder and harder to do. Think of the big institutions buying up all the properties, right? Think of interest rates and where they are now, coming down. That could be good news. Let's take a look at some other aspects. How about, let's see here. We want to take a look at, what about Europe? Think of Europe. Europe was off to a great start earlier on. They're up just shy of 4% this year to date, but today they're down 3.5%. So, we've taken a look at different aspects of the market, different elements. You think of safe havens like real estate. You think of gold being an insurance bet against, a hedge against maybe the stock market going down. You think of fixed income, right? You didn't pay much to save in the past, but now rates have gone up to maybe 4 and change in a regular savings account, maybe a money market, high yield, some CDs. I know some clients have looked at some CDs and different aspects of cash alternatives. Those are just some things to think about. So I think that right now we are in a time where we're going to see markets with a ton of volatility, and we can use that to harness maybe some opportunity. Being patient, right? Allowing our dividends to plow back in and buy additional shares while the market is coming down. You can be using that to your advantage. Also, just being patient, right? It doesn't mean sitting on your hands and doing nothing. You may be in the best places. And sometimes it may not be so hard to or so easy to realize. When you think of what's happening right now, your portfolio might be down, 5, 10%. Given time, over the next 2, 3, 4, 5+ years, it may have been a fantastic decision to hold on to those investments. You think of good quality stocks, good quality companies with earnings, growing estimates, doing all the things they're supposed to be doing, despite radical change, despite regulations, despite an administration that may not be so friendly to tariffs if you're importing goods for things that you're going to produce here in the U.S. So with all that, I think what I'm trying to say here is this is a sit tight, be patient, don't react in an irrational way, right? We don't want to lose money, but panicking is not going to help, right? If you do have concerns, certainly reach out to us. If you're working with an advisor, and hopefully that advisor is educating you and bringing you up to speed on what's happening and why, because the why is a big deal. But knowing what you're facing and knowing why it's happening to you, I think is important. For those folks who have time on their side, this should be a blip on the radar. Now, it could take a year or two for this to kind of transpire. We're still trying to figure out what's going on with tariffs, how long, how much, who's it affecting, and what aspects of the market are going to come into play. But all things considered, I think for most folks, you're going to be doing just fine in a few years here, right? It doesn't mean that you're going to lose money every single year until year 4, year 5. It just means it might get a little bumpy. Fasten your seatbelts. Get ready for the rest of this ride. And thanks again for listening to this brief episode of the Pennywise Financial Podcast. We'll see you next time.
You've been listening to Pennywise Financial, brought to you by Monarch Wealth Management. Constantine and David really care about their clients. They want to make sure you're happy, so you'll continue to hire them. There's no commitments, and clients are free to leave whenever they want. Think about being able to pick up the phone and call someone for guidance and advice on almost anything, from buying a car, selling a home, buying vacation properties, or even selling a business. Reach out on the website at monarchwealthmanagement.com. There are 2 offices in Rochester and 2 offices in Buffalo. Reach out to us on Facebook, LinkedIn, Twitter, and YouTube, or call us toll-free at 800-480-1580. That's 800-480-1580. Until next time, this is Pennywise Financial, signing off.
The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA, and SIPC.